All right, what's going on, everyone? Looks like most of you know the drill already. Give me a little shout out here. Let's see who's in here. Welcome to Stocks and Coffee. I'm on a little bit of a different setup here. I'm traveling, so I don't have my multiple screens, so I'm still getting used to this. So it might be a little bit herky jerky here, but we got a good turnout. A lot of regulars in here. Let's do a little some shout outs. Charles, what's going on? Give me a shout out. Let's see who's in here and where you're from. Kurum, what's going on? Steve, how's it going from Utah? Tim, what's going on? Tim's got his green tea and honey. We got Will, what's going on from Jacksonville? Eric from New Jersey. Jay, what's going on? Simran, how are you doing? Aaron, we've got Ron here. Let me see here. Indo, what's going on? Steve from Boston. We got Aaron from Chi-Town. Viraj from Sweet Home, Alabama. One of the few states I've never been to, actually. Anu, what's going on? We got Richard, Amin, Simon, Jesse, what's going on? Indo, of course, from San Diego. Kareem from Dallas. Lance from Texas. Jay from Texas as well. And Kurum from Houston. We got a big Texas turnout. Simran from Ontario. We've got Viraj is asking, what coffee am I drinking today? Usually I'm drinking Caribou or a local San Diego coffee. I'm traveling today, so it's Nestle Instant. Not my usual, but it's not bad. We got Zameen from the UK, Ramon from OC. I'm assuming that's Orange County. Is it still raining over there? When I was driving through Orange County yesterday, it was raining quite a bit. Alex from LA. We've got Aaron from Oakland, Oregon. Sorry, big turnout here. I don't know if I can get through everybody here. Blasius, I hope I said your name right, from NYC. Kashal from Oklahoma City. Simon from Quebec. It's snowing over there. I miss the snow. I was in Minnesota for 15 years. We've got Haley from Alabama as well. Ricky from Atlanta. Uh, A Butterfly from NYC, Queens. We've got Ramon, Pubin from Vegas, Valerie from Edmonton, and we've got Sullivan here. All right, big turnout, big turnout. Lots to talk about today. Um, Kind of building on some of the themes we talked about last time, we're going to talk about some of the tariff stocks, stocks related to tariffs, essentially related to China, India, and Canada. We're going to talk about post earnings setup. So a lot of earnings have come in now. It's actually been a pretty good earnings season in terms of the numbers. Maybe earnings reactions have been a little mixed. But as of last week, 33% of the S&P 500 had reported, and about 70% had beat on expectations. Sometimes the reactions haven't corresponded with that. So we'll take a look at that, especially with the big tech stocks, and we'll go through. Most of the big tech stocks have reported now, so we will go through those and see if we've got any setups to potentially trade. We're going to do our usual market analysis, and we're going to talk a little bit about volatility. The market's been volatile. A lot of questions on how to play it. So we'll talk about some of the adjustments we want to make related to that. And of course, as usual, if you guys have any questions, you can post them in the chat. I forgot to ask. I think it's all right because no one said anything, but I'm assuming you guys can see my screen okay. And really quick, when I flip, I'm not sure how I set this up. When I flip to my charts, are you able to see that? Okay, good, good. All right. So let's get to it. Thoughts in trading through market volatility. The last 2 weeks have been very volatile. It started 2 Mondays ago when we had the DeepSeek news coming out of China. A lot of especially the tech related moves in this market have been related to AI. And we all know, probably by now, the DeepSeek news. Market gap down on Monday on that news that a China company had developed a much better and faster and less energy using AI. and that sent the market in kind of a free fall on Monday, but recovered very quickly. And essentially, the entire week was recovering from that Monday gap down. And then it was like Groundhog Day. The next Monday, it was the tariff news and different news event, but same thing. We had the gap down, and the rest of the week was essentially recovering from that Monday news. And we can see here in SPY, it's reflected here. We had the deep sea gap down, then getting back those gains, and then the tariff gap down, and then getting back those gains. And Friday we had some kind of mixed reaction. Some of that might be just hesitancy now going into weekends because it seems like a lot of news comes out on the weekends, and then the Monday, we never know what's going to happen. And also, there was a jobs report that came out that was kind of mixed. It wasn't bad news, wasn't good news, and so maybe that could have had something to do with Friday's move as well. But at the end of the day, a nice recovery from that gap down. So you can see the type of volatility we're getting over not only the last 2 weeks, but it was essentially over the month, and we could even say since the election. So and expect that to continue. So the question is, how do we play that? And first thing, let's look at a comparison in market volatility. Notice what we're seeing here in terms of the type of choppiness, gap downs, recoveries, run ups. There was a very strong run up here, then the gap down. So you can see very volatile market. Compare that to some of the nice trends we've got in the past, like November 2023 to April 2024. This was when the Fed signaled a shift in their policy, and we can see how nice and tight this move was. Then we got a natural pullback. I've forgotten what the news was now, but the market was ready to pull back. And you can see we had another very nice run that was easy to trade. Not a ton of volatility. Maybe there's a pullback in here. Then 2024, we got this deep pullback here. We had a run up. Again, not a lot of volatility until the next pullback. And that's kind of standard. And notice here, over the last essentially 2 months here, very different. So you need to use a different style of trading when you're going through volatility. So we'll talk about a few of those adjustments that can be made, but this illustrates the kind of difference in the market we're seeing now compared to what we've seen in the past. And my expectation is we'll see it in the future. Now, a couple of things: that doesn't mean you can't trade through volatility. And that also doesn't mean you're not in a bullish market. There's this tendency to think, okay, the market's really volatile, I should stop trading. But as you can see here, even though the market has been volatile, we're essentially still in an uptrend, right? And if you think about it, if you forget about this volatility and just look at what has happened, say, since August, the market was ready to pull back anyway after a big run in SPY, going from 511 all the way to 607. So in that sense, this could be standard. And notice here, through the market volatility, we are still near all-time highs. So obviously that kind of lets you know, even though the market is volatile, there are trades to be had, there are trades to be made, and there are some areas that have been maybe less volatile than others, and you have to be able to identify those areas. So just understand you're in a different market. Maybe your toolbox of setups you're trading is different. Your risk, your targets should be a little different. Um, so one of the things you always want to do when you're in this kind of volatile market is it can be a little tough to do because it's so choppy, but still try to identify the trend through that volatility. Are we in a range bound market? Are we still trending higher, even though there's been a lot of back and forth? Is if you're in an uptrend, is that uptrend breaking down, or are we headed for a downtrend? So that's something you really want to identify. We'll actually kind of skip through. We'll go back and forth to market analysis and talking about market volatility as we kind of look at what's happening here. So if we look at the market here, we just talked about the fact that even though we're in this market volatility, we've had some news that has come out that is kind of negative, right? In terms of DeepSeek, in terms of tariffs, some of the earnings are mixed in the sense that what we talked about before, we're actually seeing a lot of beats of expectations and revenues. But the reason a lot of stocks have not followed through is because their guidance going forward has been measured. And You have to ask yourself, why are they doing that? And my theory on this is a lot of these companies are purposely lowering their guidances so they can easily beat next time. And guidances were actually a little bit lowered already this quarter. So there's strategic reasons, and we can go to, say, Amazon. Let me just pull Amazon up here. Um, you can see here, Amazon gap down on Friday on earnings. It actually had very strong revenues, very strong earnings, a lot of good stuff going on in the company. But in their guidance, in all guidances, I'm talking about what their expectations going forward. They were more measured in their expectations of revenue growth, and that spooked the market a little bit. And you can see Amazon gap down. And we actually like that. We've talked about this before. I think if you've attended the last few Stocks and Coffee, or if you're a member of the Bulls on Wall Street swing group, we talk about this all the time. Strong stocks that gap down on news that isn't really that much of a concern. We really like that. And it can be a little scary to enter these things. But we have some setups that we like to trade. Someone in here mentioned our CRDO swing. That was another gap down type of play we did. But Amazon is on watch as a bullish setup, even though it gapped down on earnings. So anyway, going back to what we were talking about, in terms of how we're analyzing the market, we can think about these news events, and then one second here. I'm having trouble switching back and forth to my stocks because this Zoom toolbar is right over where I do that. Here, let me fix that. All right. Yeah, I'm an old dog, so when I'm off my own, my usual setup, it doesn't go well for me. There. Okay. Now notice here we've got quite some news that could really spook the market, and the question is, we look at these news events and then say to ourselves, how is the market reacting to that? How is it recovering, or how is it following through on these kind of news events? We've had some news that has been concerning related to inflation and the Fed. Um, Again, we have DeepSeek, we have some of the political stuff going on, the tariffs talk going on, and yet the market is at all-time highs. So we can see that as a positive. We like to look at our market breadth indicators. One of my favorites is T2108. Many of you guys know this indicator very well. In TC2000, this is a measure of stocks above their 40-day moving averages. So obviously, if the market is at highs, we want to see this strong as well. If the market is pulling back, we want to see how is this pulling back, and it kind of gives us an idea of, are there positive divergences, are there negative divergences, is it in line with the market, what the market is doing? And the fact that you can see here it's bounced very strongly off the lows here, and is nearing kind of overbought conditions. Needs to go a little higher, but I think that it's telling us here that the market is pretty healthy, that a lot of stocks are above their 40-day moving average. So that we could take that as a positive indication. So as we've rode through this volatility, if T2108 would have been down here, then maybe we'd be saying, okay, the broader market is a little concerned. These news events have impacted the market, but we're not seeing that right now. We can also look at RSP. This is stocks that are equally weighted within the S&P 500. And this one's interesting in that it's not at highs, even though SPY is, so we can see that as a negative divergence. But it has made a strong move, and a little bit of a stronger move on the market rebound. So I would say we could see this as maybe not a positive divergence, but keeping in line with what the market is doing. And there's some other indicators you can look at. You can look at your own indexes and your own watch lists and your own ETFs and how are they playing out. And I'd say overall, we could take this kind of volatile range bound period here and say we're maybe a little more than market neutral. So we're definitely not bearish right now. I would say market, last week when we talked, I said we were slightly bullish. Now maybe we adjust that to market neutral to slightly bullish, but definitely can still be putting on trades. But we want to make some adjustments, and let's talk about those adjustments. So essentially here, market's in an uptrend. It's volatile. It's more choppy, but definitely we should still be looking at things to the long side. But we don't want to get super aggressive. And this is part of being a good swing trader, is really understanding when you push it, when it's the perfect market or you have the perfect stocks to get really aggressive, maybe increase your risk, use more of your account size. And there are other markets where you can still make trades, but maybe I want to risk a little less. I want to take a step back. Instead of using 100% of my account, maybe I only use 30 or 40%. So there are some adjustments to be had. Some of the adjustments we should be making, and we have been making, is one, trade smaller. So generally my risk, kind of the risk range I'm looking at when I put on a trade is 1 to 2%. And 2% is very aggressive, but generally around 1 to 1.5%. And for those of you who don't know, when we talk about that, that's not position sizing. What that means is how much would I lose if I get stopped out of this trade? What is my risk on this trade? And risk is not your entire position size. It's where you would get stopped out, how much you would lose on that trade. So for example, if you're in a stock that's trading at 100 and your stop is at 99 and you have 100 shares, if you get stopped out, you would lose $100. And that's the perfect amount of risk for, say, a $10,000 account. 1% would be $100. If you have a $100,000 account and you're trading at 1% risk, that would be $1,000 you could lose on a trade. So my risk range is generally 1 to 2%. And then again, 2% is very aggressive. Now we can make adjustments. So the last two trades we made, we got into CRDO and Netflix, and we traded those at 0.7% risk. So if you're using a $100,000 account, instead of risking 1,000, risking 700, or instead of risking 1,500, risking 700. So you have these two positions that are on, but it's really just like a position and a half. And the reason for that is we know this is a very volatile market. Every weekend we're getting these gap downs. Could happen again, we don't know. So we want to protect ourselves. One, if we take the loss is less. If it were to gap down on us, we'll lose less. You know, even though we have this idea that we're going to get stopped out at a certain level, if there's a big gap down, we could take a bigger loss, right? And so that protects us in that area as well. So we want to trade stop smaller. And point number two, we want to trade looser. Our stops we want looser, meaning, you know, that example I just gave you where if we enter a stock that's trading at 100 and we put our stop at 99, maybe we want to stop down at 97 because we know the market's volatile and we don't want to get chopped out of good positions. Like it might gap down to 98, but it's still a really nice position. It's still a really nice setup. It's just reacting to that market news of the day. And that's the toughest thing in these volatile markets, especially when the market is bullish and you know you should be long. And this will happen a lot where the market is going higher, but it's been very volatile. And you look and you say the market's gone up 5%. I'm down. And it's because you're getting chopped out of good positions. The volatility is chopping you out. And there's option strategies. Those of you who trade options, we can talk about that later, but this is more swing than options. But there are option strategies that can help you with that. But if you're just trading standard, use looser stops. And you have to position size a little smaller to protect yourself, but definitely use looser stops to keep you in those trades. And that, again, will help you avoid getting chopped out, and it'll protect you from the gap downs. That's another thing here, and this relates to the mental game aspect too. All of these gap downs can make it very difficult to trade, right? Some of you newer traders, you've been through it in the last 2 weeks. You saw what happened with DeepSeek. You saw what happened with the tariffs, but you also saw that the market recovered very quickly. It didn't continue down, right? And that happens a lot in these kind of volatile overreactions. We say overreaction a lot. The market doesn't like uncertainty, and its first reaction to this kind of stuff is always to trade scared and protect itself. So we often see these overreactions, and then the smart money comes in, and we see these recoveries. It happens with stocks, like we just saw in earnings. We'll look at our CRDO trade. That's a good example of it. Notice here with our gap downs, we love these gap down setups. Notice here it had gap down, then recovered. Our entry for one of our gap down strategies, and when we see the gap down, we don't just blindly enter. It could go down further. But if it recovers very quickly and pulls into the gap, we enter, and then we exit when it hits that gap fill, which was right here. Textbook kind of gap down setup here that worked very nicely. And the market does the same thing. So the point is, the first thing you want to do is when you see these gap downs, don't panic. Don't just jump out right away. And some people do the opposite. Some people get really scared and just get out of everything and take these losses where, you know, they could have got out at a better price, or totally recovers, like we saw with CRDO or the market itself. Um, Another thing, some people are just very aggressive, and they see these as overreactions and jump in, and they get super aggressive, and that's not good either, because if it does go down further, you're going to lose a lot. So the point is here, have a level head. And one of my key tenets when the market is volatile is you don't become volatile. Still strategically look at everything. Don't panic, even if you've got some gap downs and some big losses. What we always do is if we're in a stock and the market gaps down below our stop level, we take the stop off and we watch for a little bit and see does it recover. And oftentimes it will recover. Now, that can be a slippery slope, right? You sit there and watch and watch and watch, and it goes down farther and farther and farther. But you have to stay calm. You have to analyze it, look at the volatility, and say to yourself, let's use round number 100 again. Let's say your stop was at 100. The market gaps down to 95. You're already at risk down to 95. So risking another few points isn't going to make a huge difference. So say to yourself, okay, it's at 95 now. Let's see if this was an overreaction and the market recovers. I'll go from 95 down to a max pain of, say, 92 or whatever you decide it is. And at that point, I have to get out. So you have to be very strategic, almost think like a robot. Don't let your emotions get the best of you, and become less volatile yourself as the market is becoming more volatile. And if you can do these things, you'll have a huge edge in these volatile markets. All right, so that's what I want to talk about today related to risk and our market analysis. So you can see some of the adjustments you want to be making. Now let's talk about some stocks we could potentially be trading. We're going to go really quickly over some of the tariff stocks. Then we're going to look at, we've got a good set of stocks that have reported earnings. We'll just look and see if we have any setups related to that. And then big tech as well. And I see you guys have some questions here. I'm going to go through those in a second. And you guys know, probably know already, some of you guys are members of the Swing Service, but there is a 14-day free trial. So if you go to Bulls on Wall Street, the swing trading tab, you can do a 14-day trial, or you can just join here. And we will have reports out on Monday. I'm going to do group mentorship this week as well. And of course, there is the chat room here as well, and alerts. So check that out if you haven't already. And you guys have some questions here, and then we're going to get into some of the stocks that we are looking at. Let's see here. Okay, looks like you guys just have some commentary. I don't see any questions. Kushal's liking the software names right now. Yeah, they're software. It's interesting. There are some software stocks that are getting hit really hard. Some are doing very well. I think this earnings season is going to be very telling. So we've got the big techs have reported, the banks have reported, a mix of some other stocks, and a lot of the software stocks, the kind of mid cap and low float software stocks, are coming up and starting to report earnings. If we see some good earnings there, we can get aggressive with some of these software stocks. For now, I've been focusing a little more on other areas, but definitely on watch. Okay, all right, let's take a look at some of these stocks right now. Anu's asking about PDD and PINs. Those were some earnings plays. We'll talk about those in a second when we get to post-earnings stocks. Trenton's asking about MSTR. I don't have the chart up right now, but from what I remember, it's under the 50-day moving average right now. I'm watching for it to remount the 50. Let me pull it up here. It's a little harder to do here on this setup, but MSTR. Yep, I was right. Okay, so you can see here, dipped below the 50-day moving average. 50. I think the 50 could provide resistance right now. I do like the money flow indicator is showing a little bit of a positive divergence. Price action is holding this low here, so that's a good thing, especially if this ends up being a higher low. But I'm waiting for a remount of the 50-day moving average. So you can see here the 50-day right now is at about 358. Let's say it gets up to about 359. That'll be kind of a slam dunk entry for me. Okay, all right. Let's look at some of these tariff stocks, and then I'll get back to your questions. First, let's look at actually, we're just going to basically look at the ETFs, FXI, EWW, EWC. Now, FXI had been showing a lot of relative strength. So last weekend, when the tariff news came out, and it was China 10%, Canada 25%, Mexico 25%. It was interesting that, for the last, I don't know ever how long, all the tariff talk has been related to China, and China has been getting hit essentially since the election. China was looking very good pre-election. Then the election hit, and you can see it went all the way down here to 28. Notice here, and we had really uh, made note of this, that even with all the tariff talk, and last weekend when the tariffs were set to begin, China was showing a lot of relative strength compared to Canada and Mexico, and that's kind of played out here, where even with all this volatility, even with all this negative China talk, the stocks and the ETF and the actual trades, essentially Wall Street, is telling us something different. So there is definitely buying interest going on here, and it's an area we should be paying attention to. Anytime you've got these volatile news events, you should trade smaller and make those adjustments. But I definitely think China stocks should be on our watch list. So here's the ETF FXI. You can trade the leveraged ETF yen. And you can see here it's the same pattern, but it's triple the leverage, so it's up 4.5% instead of say 1.4%. So for the extra volatility, you can trade yen, and of course some of the stocks. We'll just pull up a few of them that we're watching. Baba, of course, and you can see how strong a move through all this tariff talk. You would expect the stock to be doing poorly, but it's very strong right now. So anytime you see these divergences in what you think should be happening and what is actually happening, that is a very good sign for the stock. And look at all this accumulation that has come, positive accumulation that has come in the volume as well. So Baba, SE, you can see here, nice trend. You would never know that China's in the news, right? Looking at this pattern. So there's a number of China stocks, and of course we have a list of a bunch of different China stocks we watch. And you can also pull up an ETF and take a look at the list of stocks that make that up. Now let's move over to Canada. Notice here, Canada had got hit really hard, but has recovered, and is above the 50-day moving average now. I still think China is a better play because it's shown so much relative strength. But we are seeing a recovery and maybe some opportunity here. And then Mexico as well has been even stronger. You can see the big reversal here. I think this was Monday when they had the news of pushing the tariffs out 30 days, and you can see that level has held right now. So these areas have stabilized, but I definitely think China is the area we should be watching. So we are definitely watching a number of um, China stocks. Now let's go to some of our post-earnings plays here. And I'll get to your questions in a second. What I'm going to do is I've got about 25 stocks in here. We're just going to flip through these and see if we have any good patterns or setups to potentially trade. So we'll start with Spotify. And you can see here is the earnings gap up on Spotify. There's generally 2 or 3 different patterns we're looking at when the stock gaps up. I think someone was mentioning here that it might be posting a flag, but that's right here. We see this either we see a pullback, and I'll look for where the pullback stabilizes. Oftentimes at the bottom of the breakout bar, where it gapped down from, or the 9 EMA. This is doing something different, and then essentially pullbacks are value plays. We're looking to enter at a lower price, right? These kind of high type flags are the opposite. We get a consolidation near highs, and Spotify is consolidating really nicely. And now we're looking for a break of the range and entering at a higher price, because we believe that break will lead to even higher prices. Like, it's consolidated that gain, and now it's ready to make its secondary run. And that's what we're looking for Spotify. So we're watching Spotify very closely for a break of, say, the 630 range. It's at 620, about 623 right now. So Spotify is definitely high on the watch list for next week. FLXS is the opposite. You can see the big earnings breakout here. This is a pullback play. What we're watching for here is the bottom of the breakout bar and the 90 EMA we talked about. We're looking for strength at this level. So it tested this level on Friday. Say next Monday or Tuesday, if it closes up here around 55, that could be a potentially pullback entry. SoFi, this is the earnings gap down. Nothing to do with it right now. NOV, this is an energy oil and gas stock. You can see the breakout pullback here. Nothing to really do with that one right now. So really, FLX and Spotify are the good setups right now. XPO, we have the breakout consolidation here. Because it broke out over the 50-day moving average, even though we don't have a great pattern right now, I think it would be an easy play in that we could enter here, place a stop under the 50-day moving average, and maybe target the top of the range here. And this is a trucking stock, and some trucking stocks have been doing well. Peloton had the big breakout. I think someone asked, did someone ask here about Peloton? Had the big breakout under the 50-day moving average. I'd probably wait to see if it can get it back up over the 50. Hilton had a big breakout. Nothing to do with that right now. We'll see if it gives us a high tight consolidation, but one day is not enough to predict that. We need to see 4 or 5 days of consolidation. Uber is really interesting. It gapped down and recovered here's the earnings gap down, recovered very quickly. And anytime you see a stock or the market reverse bad news, that is a very bullish signal. So Uber is definitely on watch. Maybe a little extended here. If we got an inside day on Monday, maybe if it dipped down to 72 or 71, that would be a good entry. JetBlue is potential gap down reversal. If it pulls into the at about 7, it's at 667 right now. Ralph Lauren, the breakout pullback. We'll see if it stabilizes. Delta broke out a while ago. This was one of the first stocks during earnings season. No real pattern here, but definitely on watch. And a lot of our airline stocks are on watch as well. Roblox, this is a stock that has been very strong, gap down to the 50-day moving average. And now we're looking for it to pull into the gap. That would be our gap down reversal entry, very much like CRDO. So we'll watch to see if we get a close here. It looked like it might do it on Friday, but pulled back with a lot of the market. If it were to get up over 68, it's at close at 68. It's at 66.28 right now. We could enter with a target at about 74. Mattel broke out. Now we're just watching to see what pattern we get. JCI, same thing. Nice breakout. We're just waiting for a pattern. Google, we actually entered here on the gap down to the 50-day moving average. It's near stop level right now. Actually, it did break through the 50-day moving average. But we'll see Monday, Tuesday if it can recover and get back on the reversal. Google's another one that had very strong earnings, very strong revenues. The reason it gapped down was much like Amazon related to its guidance. ISRG gap down reversal. We're looking for a move at about 595 for a potential entry. Starbucks was the breakout, already pulled back. So we're waiting for new entries there. Meta broke out right here. Has been floating higher. We're waiting for a pullback there. See if there's any other decent setups. We're in Netflix right now. Netflix is doing nice. PayPal, nothing to do unless it were to get up here around 83. Someone asked about Pinterest. We got the big breakout. Now we have to watch and see what it does. Ideally, if it were to pull back some and then stabilize, that would be a really nice entry in Pinterest. Expedia, we really like the travel stocks. We talk about airlines. Expedia is travel booking. And you can see here, really nice breakout above the high. I think that's all-time, not all-time high. All-time high was in 2022. But the recent high here, if it could pull back here to the bottom of the breakout bar, which corresponds with this high, around 192, that would be a really good entry for Expedia. All right, that's the some of the earnings breakout and breakdown stocks we're looking at next week for potential entries. Now let's do a quick review of big tech, then I'll get to more of your guys' questions. Amazon, we already talked about, had the earnings breakdown, and now we're looking for the reversal. I wouldn't guess it. It has to show us that it's going to do that or where it's going to do that. Tesla had a kind of a volatile earnings day, had mixed earnings. Actually, they were pretty bad earnings, but they had some mixed news in terms of their guidance and news. The market liked the fact that they're talking about cheaper cars, and that led to this kind of 2-day bounce. But as you can see, it's trended downward. So I think there's, at this point, nothing to really do with Tesla. NVIDIA has earnings coming up. It is putting in the gap down reversal. So you can see we were looking at this on Friday for potential entry. Has earnings on the 26th. The gap fill is here around 142, and it's sitting right around 130 right now. So, NVIDIA is very sensitive to tariff talk, to all the chip talk. So it could be volatile, but technically the setup is there right now for the gap down reversal. Nothing to do with AMD in a really bad trend right now. Same goes for Microsoft. Apple, I wouldn't touch unless it gets back up over the 50-day moving average. Meta, again, we're waiting for a pullback. Netflix, we're in right now. If you're not in it, look for a pull. If it does pull back to about 997, and then CRM has earnings coming up. All right. So that's pretty much what I wanted to go over today. We talked about the tariff stocks. We talked about post-earnings setups. There's some potential setups in big tech. Remember, guys, you guys can contact me anytime, and I'll get to your questions in a second here. But Bulls on Wall Street swing trading, again, there's a 14-day free trial. My own site, pauljsingh.com. I'll be posting some more posts, some more articles this week. Big article on how to trade the potential outcomes in with some of the China chip stuff and potential tariff outcomes. And then, of course, Twitter and Instagram as well. All right, let's get to your questions. Looks like we've got a lot of them. We talked about MSTR, similar pattern to SMCI. That's not surprising. FUTU closed really strong. Yeah, and that could be, I know with the Super Bowl coming up, that's had an impact on that stock. Oh, sorry, I have the wrong ticker. That's not the one I was thinking of. Capital Markets. Let's see here. I don't know a lot about this stock, but it is a nice pattern, breaking the range here. So I do think you have a good entry. I'd probably use a stop under the 9 EMA. Where are you targeting PLTR? Well, I'm not in PLTR, at least for a swing. I do have it for some other types of setups, for other types of trades. In terms of a target, I mean, it really depends on where you entered. But let's say the standard entry short term would have been a break of this range here, if you were able to get in at that point. First thing I would do is look at my risk. So if you're entering at 105, your stop is at 99, you want to be able to at least get 10 points, which is 115, which it already did. You can also use a measured move if it's a longer term swing. What I like to do is, what did it do the last time it did something similar? So you can see here, this breakout here was around 51. And in about 2 weeks, it ran up to 66. So that gives you an idea of what you could target this time. So combination of risk, how volatile the stock has been, and measured move in terms of what it has done in the past. Okay, Christopher is mentioning that Uber had some news with someone buying a stake. I hadn't really looked at that on Friday. Makes sense with that. That's why there could have been a reversal. Ekman, okay, that's a big name. That it's interesting when you get these types of things. Sometimes those initial moves can pull back very quickly. So I'd probably keep an eye out on Uber and watch to see how it reacts going forward. Okay, Kurum likes Roblox. BBAI. Information technology. Yep, strong move. Has an IPO high around 16 and still only at 9, so there's still a lot of room left. Pretty extended right now. Maybe on a pullback, it could be entered. Um, Kevin, I'm not sure I understand your questions. It probably would take a little more if you're asking about options. Why don't you shoot me an email and I'll put my email here, old school AOL here. But shoot me a message with clarifying your questions, and I'll get back to you. singjd1@aol.com. Yeah, Kushal, I had that mixed up with Fubo, but you're right. China stock. What about Nail? Nail is really beaten down. I'm in Nail for long term, but if you were looking for a trade right now, I'd hold off on that. Yeah, Lilly had some good news and Gap Tire last week. A little extended here. I'd wait for a pullback if I was looking to enter. All right, good. That looks like the extent to your questions. Great session as always, guys. Looks like I have another one from Aaron. Let's look at AAOI, semiconductor stock. Has been strong, nice pullback. I'd probably wait for a remount of the 50-day moving average, but nice looking setup overall. Okay, all right, guys. We'll do this again next Saturday. So make sure you sign up. You can sign up through if you're on our email list. You can go to my Twitter as well. I post it there. Those of your Swing members, we're going to talk. We've been waiting to do this, but we're going to talk AI stocks and quantum computing stocks next week in our group mentorship. There's just been so much news going on that I haven't had a chance to go through that analysis, but we'll do that next week. If you're not a member and you want to be a member, of course, again, you can go to Bulls on Wall Street. I'll post that link here and you can join. And if you have any questions at all, just shoot me a message and I'll get back to you soon. All right. Have a great weekend. Those of you who are watching the Super Bowl, enjoy that. And I will see you guys on Monday. Talk soon.